Investment property. Investment property is land or building held to earn rentals or for capital appreciation or both. TAS 40 prescribes the accounting and disclosure requirements for investment property. When you encounter investment property, you should be reminded it only includes land and building. Therefore, it does not include any other type of asset other than land and building, as those other assets will form part of the other specific accounting standard. Also, unlike those other assets such as PP, where they generate cash flows in connection with other assets held by an entity, an investment property generates cash flows independently. To know more about investment property, here are the examples of investment property. First, land held for long-term capital appreciation. Second, land held for undetermined future use. Third, a building owned by the entity and leased out under one or more operating leases. Fourth, a building that is vacant but is held to be leased out under one or more operating leases. And lastly, property that is being constructed or developed for future use as investment property. Leases, as mentioned in investment property, which has its own specific accounting standard under PFRS 16 leases. An overview of this topic and is defined under the Appendix A of UFR 16. A lease is a contract or part of a contract that conveys the right to use the underlying asset for a period of time in exchange for consideration. A lease has the lessor and lessee as parties under a lease accounting. It is also classified as either an operating lease or a finance lease, which under investment property, only those buildings that are leased out under an operating lease are accounted for under PAS 40. An operating lease is a lease that does not transfer substantially all the risks and rewards incidental to ownership of an underlying asset, unlike a finance lease that do transfer substantially all the risks and rewards. That's why investment property under an operating lease appears in form and in substance is an actual rent. Therefore, we can check on building held to earn rentals as provided under PAS 40. Unlike a finance lease in substance appears as sale because of the indicator that tells an underlying asset is a finance lease, such as 1. Transfer of ownership, 2. Bargain purchase option, 3. Major part of useful life 75%, 4. Present value of lease payments is at least 90% of the fair value of the leased asset at the inception date, and 5. Specialized in nature. While those that are not qualified as investment property and not accounted for under PAS 40 are owner-occupied property, which is accounted for under PAS 16 property, plant, and equipment. Another is held for sale in the ordinary course of business under PAS 2 inventory. And property that is leased out to another entity under finance lease, which is accounted for as non-current assets held for sale in discontinued operations under PFRS 5. Other classification of investment property. Partial owned use. If the portions could be sold or leased out separately, an entity shall account the portions separately as investment property and owner-occupied property. If the portions cannot be sold or leased out separately, the property is investment property only if the owner-occupied portion is insignificant. But when the investment property is insignificant, the property is owner-occupied. Ancillary services. If the entity provides ancillary services to the occupants of a property held by the entity, the appropriateness of classification as investment property is determined by the significance of the services provided. If those services are a relatively insignificant component of the arrangement as a whole, for instance, the building provides security and maintenance services to the lessees, then the entity may treat the property as investment property. An example of this is when the owner of an office building, Mr. John, provides security and maintenance services to his building tenants, Miss Kathy and Rose. Another is where the services provided are more significant, such as in the case of an owner-managed hotel, the property should be classified as owner-occupied. An example of this is the services provided to hotel guests, Mr. Troy, Miss Raina, and Miss Pony, in an owner-managed hotel. An owner-managed hotel is classified as a property, plant, and equipment rather than an investment property. Intracompany rentals. In the perspective of the individual entity that owns the property, a property that is leased to a parent or another subsidiary is considered as investment property. While in the perspective of the group as a whole, and for purposes of consolidated financial statements, the property is treated as owner-occupied. Recognition and measurement of investment property. An investment property should be recognized as an asset when it is probable that the future economic benefits that are associated with property will flow to the enterprise, and the cost of the property can be reliably measured. Initial measurement. An investment property is initially measured at cost, including transaction cost. The cost of an investment property is also not increased by startup cost unless they are necessary to bring the property to the condition necessary for it to be capable of operating in the manner intended by management. Operating losses incurred before the investment property achieves the planned level of occupancy, or abnormal amounts of wasted material, labor, or other resources incurred in constructing or developing the property. Under initial measurement concepts, such as acquisition through exchange, trade-in issuance of equity, issuance of debt, etc., involving investment property are the same with PPE. Cost of a self-constructed investment property. The cost of a self-constructed investment property is the total cost incurred at each reporting date, or at the date when the construction or development is complete, whichever is earlier. Acquisition through non-monetary exchange, or combination of monetary and non-monetary exchange. When an investment property is acquired through non-monetary exchange, the cost of such an investment is measured using the following order of priority, URG. 1. Fair value of asset given up plus any cash payment. 2. Fair value of asset received minus any cash received. 3. Book value of the asset given up plus any cash payment. If the acquired asset is not measured at fair value because the exchange transaction lacks commercial substance, or the fair value of the asset received or the asset given up is not reliably measurable, the investment property shall be measured at the carrying amount of the asset given up. An exchange transaction has commercial substance if the configuration, risk, timing, and amount of the cash flows of the asset received differs from the configuration of the cash flows of the asset transferred, or the entity, specific value of the portion of the entity's operations affected by the transaction changes as a result of the exchange, and the difference in A or B is significant relative to the fair value of assets exchanged. Subsequent measurement. An investment property is subsequently measured at either fair value model or cost model. One method must be adopted for all of an entity's investment property. A voluntary change in accounting policy shall be made only if the change will result in a more appropriate presentation of transactions, other events, or conditions in the entity's financial statements. TAS 40 notes that this is highly unlikely that a change from the fair value model to the cost model will result in a more appropriate presentation. Transfers of investment property. Going with the underlying concept of transfers to and from investment property, which shall be made only when there is a change of use. A change in use occurs when an assessment of whether a property no longer meets or starts to meet the definition of investment property, and there is evidence supporting this change. Examples of evidence for a change in use include commencement of owner occupation. When the property begins to be held for use in production or supply of goods or services or for administrative purposes, resulting to a transfer from investment property to owner occupied property. Commencement of development with view to sale. When the property starts to be developed with an intention to sell, resulting in a transfer from investment property to inventories. End of owner occupation. When the property is no longer an owner occupied, leading to a transfer from owner occupied property to investment property. Inception of an operating lease to another entity. When the property is leased out to another party under an operating lease, resulting in a transfer from owner-occupied property to investment property. Measurement of transfers. Measurement of transfers include transfer to and from investment property using cost model. It shall be made at carrying amount. Transfer from investment property carried at fair value model. It shall be accounted for at fair value. Transfer from owner occupied property to investment property that will be carried using fair value model. The difference between the fair value and the carrying amount of the property shall be accounted for as revaluation of TP. Transfer from inventory to investment property that will be carried using fair value model. The remeasurement to fair value shall be included in profit or loss. Financial statement presentation and disclosures. An investment property is reported as a non-current asset in the statement of financial position, and it shall be recognized when the investment property is disposed, permanently withdrawn from use or retired, and no future economic benefits are expected from it. The gains or losses arising from the retirement or disposal of the investment property shall be determined as the difference between the net disposal proceeds and the carrying amount of the asset and shall be reported in profit or loss. Impairment. Under Pass 36, an investment property that is carried at cost model is tested for impairment, while an investment property that is carried at fair value is not tested for impairment, since any decrease or increase in fair value is simply reported as gain or loss in profit or loss. Investment property also disclosed those related disclosures that whether the entity uses the cost model or fair value model as measurement of investment property, the amount of rental income for the period along with the related expenses, new restrictions on the investment property either through rentals or sale proceeds, contractual obligations to purchase or construct investment property. That's all for investment property. See you in our next accounting video.